A lot of these pharmaceutical names, you're looking at Lupin and Wockhardt. What exactly is special here?
Absolutely. So, Mangalam, what we're watching out for today, especially for Lupin and Wockhardt, let me start with Lupin first. Now, Lupin, obviously, there was an announcement that came in where the company is wholly owned subsidiary in Netherlands. They entered into a definitive agreement with VISUfarma. That is an ophthalmology company in the European region. Now, they have a lot of these countries which they cover or sell their products in Europe. UK is also one of them which is included in terms of the sales that come in. So, for what does it mean for Lupin? One is just a 190 million euro purchase or acquisition that they are looking at. This is around 12 to 13 times the EBITDA. Analysts are saying this is a very positive one coming in for them because they can further expand their reach in the European regions. And other than that, in terms of overall the revenue, which you look at for VISUfarma, for 2025, the expected revenue is at around 54 million. 2024 was 48.1 million. So they're expected to grow in that 10% CAGR range as well. And that's what they've been growing around in the last 10 years. So good acquisition, expected to improve their growth as well as the margin profile. Now, in terms of Wockhardt, obviously the reason is mainly because we had those clarifications that came in from US that saying that countries with existing trade deals with United States are exempt from that 100% pharma tariff, which they were talking about on branded products and branded drugs last week. Now, obviously, this will mean that EU has a tariff of 15%. So for products that are being sold from EU will be at 15% or exported from EU to the US is going to be at 15%. Now, what the management last week when they spoke to us, they said that Zynic, which is an important drug for the company, is unlikely to get impacted because they were in the EU region. So that important drug for them will not see an impact coming in. And that is why this is, sentimentally positive for the company in terms of the impact that we could see also would be much lower, and that is why the stock is holding on to gains of almost 7-8% today, Mangalam.
All right, so those are a couple of these pharmaceutical names which are on our radar, but Vivek joins in. He has a lot to speak about on Vascon Engineering. Vivek, so we're talking about movers and shakers, Wockhardt up around 8%, a percent higher for Lupin as well. But Vascon, that is top of the pops, up 9%. What's causing this move?
Well, a very interesting update, that the company has put up over the weekend. Now, what exactly is the company saying? The company is saying they've signed a 5-year memorandum of understanding with the Adani Group, and this is Adani Infra. So, what will Vascon's role be in this particular MOU on this partnership? They will act as the execution partner under an early engagement model. So, Vascon says they will be involved in the projects, engaged in the projects from the design stage itself, and they say that 3 projects in Mumbai amounting to totaling close to 13.15 million square feet has already been identified. Now, the partnership, Vascon says, is expected to contribute an additional 30% to the company's turnover. What the details in terms of actual timelines when the projects will start, what will be the margins that Vascon enjoys, at this point of time it's not yet available, but clearly given the fact that that improves revenue visibility significantly. Remember, the end of Q1, Vascon's order book stood at just around 2,900 crores.
Okay, Vivek, thank you so much for that. But Mangalam, you're keeping an eye out on HUL as well, and this is post that Q2 update. What is it highlighting? And today, why is the stock a bit muted then?
Well, a couple of things, that stand out. We've been speaking to a lot of the consumer companies post the GST announcement that came here on HDR, and they said that there could be some near-term disruption on account of the GST cuts that have been announced. And remember, the GST cuts came into effect from September 22nd. So that implies that, the last 4 or 5 days of a working month where you do see a lot of inventory being pushed to the dealer channel, those sales were taken out. And that's exactly what HUL is saying as well. The second quarter will see nearly flat to low single-digit growth on a consolidated basis. And it was supposed to be a washout quarter. Everyone on the street was expecting that for a couple of reasons. One, that, a large part of the transition from GST would impact the trade channel, so there would be disruption on account of that. And in the earlier part of the quarter as well, there were a lot of unprecedented rains in a lot of the important markets. There was flooding, etc. So that could have impacted sales as well. So all those factors meant that the second quarter would be a washout, and that's exactly what the street was pricing in as well. That's why the stock opened lower, and thereafter we saw a bit of a recovery. But why is it still holding lower? Because the company has said that they anticipate recovery starting November. Now, most on the street thought that this transitory impact would come undone in the first week of October itself, and that will be a positive. But because signs of this disruption will percolate into October as well, it's a bit jarring. Why is that? Because October is where you have both Dussehra and Diwali. So a lot of the festive season sales that everyone is building their anticipation on will still be disrupted. So for someone like an HUL, if your most important month in the year is still disrupted and recovery is only seen in November, that's not particularly good news. That explains why the stock hasn't recovered as ferociously from the lows as the street was earlier anticipating, and sitting with a cut of about 0.5%, despite having seen a cut of almost 5% over the last 7-8 trading sessions itself. So that's about why HUL is lower. But for all the other FMCG companies, I do believe that, the recovery would be a lot faster than early November, as HUL has been pointing out, and festive season sales would be good for the entire sector by and large.
Absolutely, Mangalam. I think HUL, maybe Sal Mubarak will be a good year for them.
Let's see that. But for them, the bigger trigger always is the leadership change coming in, beauty and wellness doing a lot better, and them generally getting their act together. So this is just a niggle in the long-term prospects of the company.
Absolutely. Thanks so much for that, Mangalam, explaining us about HUL as well as other FMCG companies.